Hello and welcome to the Weekly Forex Outlook at xm.com. Next week, the U.S. inflation report will be in the spotlight, as well as GDP data out of China. We'll also take a look at how the British pound has been doing and how the upcoming UK data may affect its outlook. I'm Maria Pachortiz, and joining me to discuss all this is lead market analyst Rafi Boyadjian. So Rafi, let's begin in the U.S., where all eyes will be on the CPI report due out on Wednesday, as well as retail sales due out the following day on Thursday. What are investors expecting, and how might this data impact the dollar?
Well, Maria, we are now getting into full swing into January, so plenty of data coming up. As you said, the highlights will be the US CPI report and retail sales, but I guess mainly it's going to be all about the CPI numbers because we have seen a bit of a pickup in inflation in the US, but also in other regions as well, in Europe, in the UK. We are seeing a bit of a rebound in inflationary pressures, so that's why we've seen many central banks turn more cautious, including the Fed, of course. The Fed's recent rhetoric has been rather on the hawkish side, and we've already seen markets price out quite a lot of rate cuts out of their expectations in terms of the outlook for 2025. So it's going to be interesting to see what we get from the CPI numbers for the month of December. Now, in November, we did see some signs that in the areas where we had seen some stickiness in inflation, such as shelter, as well as the broader services sector, that maybe price pressures in those particular categories are starting to ease up a little bit. But I think if we do see any downside surprise in inflation, it's more likely to come in the first few months of 2025. And for the month of December, we're probably going to see a further pickup. We could see inflation actually hitting 2.9% year on year in this December. And this is according to the Cleveland Fed's own nowcast model. Core CPI might stay unchanged at 3.3%. So overall, it's not going to be good news in terms of expectations for deeper rate cuts in 2025. Now, the question is, how much of a boost will this be for the US dollar, which has already really been risen quite a bit during the past month, and yields have also surged quite a bit as well. So potentially, if you get an inline report or maybe a slight upside surprise, it's probably going to provide only a modest boost to the US dollar. However, should we get a negative surprise, or rather inflation comes in below expectations, I think the dollar would be vulnerable to a notable downside correction in such a scenario.
Moving to China now, Q4 GDP data is due out on Friday. How is the Chinese economy doing at the moment, and what should traders keep an eye on?
Well, we have seen Chinese growth stabilize a little bit in the last few quarters. Definitely, this situation isn't getting worse. But the question is, are the government's policy measures enough to really kickstart the economy there, because the recovery has been rather slow since coming out of the last lockdowns a couple of years ago. And so really there's still a lot of scrutiny whether Chinese authorities are doing enough to boost domestic consumption, to revive the struggling property sector. But I think we may see some improvement in the fourth quarter of 2024. We are expecting GDP growth to accelerate year on year from 4.6% to 5.1%. And this may be enough to lift market mood, the market spirits, and at the very least ease some concerns that Chinese growth isn't going anywhere. And we're also going to get a press conference along with the GDP report, and this is the opportunity for Chinese officials to brief investors on where things stand, and they're probably going to try to paint an upbeat picture, especially if the GDP numbers aren't that great. On the whole, we're probably not going to see a huge market reaction, but nevertheless, I think the data will be important in terms of broader market sentiment.
And finally, in the UK, the pound has been struggling over the past week. Can you explain the reason behind its recent decline, and also tell us how the CPI figures due out on Wednesday and GDP numbers out on Thursday may affect the pound's path going forward?
Well, that is right, Maria. The pound really has taken quite a battering. It's actually the worst performing currency in this 10 days of January that we've had up until this point. And that's because we are seeing investors become rather worried about the state of the UK government's finances. In the budget that we saw in the autumn, the government announced record tax increases, but at the same time they announced big spending increases. So overall, the measures they're taking is they're not really doing enough to bring down the deficit. But the fact that inflation has also been problematic in the UK, and if we're not going to get deep rate cuts in the UK, this is a problem for, in terms of the cost at which the government will be able to borrow more money. At the same time, we've seen GDP growth disappoint lately. So weak growth, higher inflation leads to stagflation, and this is because of these worries and potential impact on the government's finances. And then if the government is forced to raise taxes further than the increases they've announced, that would be even more of that would be a further blow to UK economic growth. And so there's real concern that the government isn't doing enough to boost UK economic output or doing enough to manage the government's finances better. All of this has led to a big jump in UK yields, and normally higher yields tend to benefit the currency, but in this case, because the yields are rising for the wrong reasons, the pound is actually falling against the US dollar. Now, in terms of the data, we are of course going to be getting the CPI report on Wednesday. We may see a small uptick to 2.7% year on year, but maybe if we do see core CPI edge down a little bit, that might soothe market nerves somewhat. But then of course the GDP numbers the following day will be important too. So we are expecting a bit of a rebound month on month for GDP to have increased 0.2% in the month of November compared to October. And if you do get such a figure, this may also potentially ease market jitters, and potentially the pound may come out a little bit steadier over the next 7 days.
Rafi, thanks so much. This was the Weekly Forex Outlook here at XM.com.